Stock investing is now more popular than ever with everyday people. Everybody talks about Tesla, the AI bubble, Nvidia, interest rates. The only problem is, nobody is actually talking about how to invest in stocks. How do you even start? Today, I'm gonna show you how to start investing in just 5 minutes. Step number 1 is finding a brokerage. That really depends on 3 things: what you want to invest in, what the fees are, and where you live. A quick search on Google will give you the best brokerages to use in your country. Always check whether they charge any fees, commissions, or spreads. I remember when I first started investing, you could get charged a few pounds for placing a single order, but today most brokers offer commission-free trading. The range of instruments is also super crucial. There's nothing worse than doing research on a stock, deciding to buy it, going to your platform, and realizing it's not on there. The good thing is most platforms offer demo accounts, so you can make one for free, play around with the platform and see what the range of stocks and ETFs is. If you're a beginner, it's best to stick to big established stocks and funds anyway, and most brokers offer these. If you want to invest in more specific markets like Estonia or Poland for example, not all brokers will have your desired stock, so make sure you check. Another important thing is to see that they're an actual regulated financial broker. That's pretty easy to do. Just Google your local financial regulator, followed by the name of the broker, and it will pop up. Now that you found a brokerage, it's time for step 2, making an account. This is actually a very important part. Some countries, like the UK and US, have special accounts where you can get tax benefits. I'm not a tax advisor, just a regular guy, so you need to read up on that, but it's worth a check because it could save you a lot of cash in the long run. I won't go into the details of making an account. Every broker is different, but you will likely need a proof of address, a form of ID, a way to deposit cash, and so on. Some brokers are quicker at processing documents, but some take a while, so don't leave it to the last moment. Okay, you found the brokerage, made an account, put some money into it. Time for step 3, actually investing. If you're a first-time investor, you will feel overwhelmed by the range of stocks and ETFs and commodities. It's normal. There are thousands and thousands, and it's hard to know which ones to pick, but don't worry, there is a way. Warren Buffett himself, one of the greatest investors of all time, has put it simply enough. For 99% of investors, buying a broad index fund is all they'll ever need to do. That's how I started too, and that's what's given me some of my best results. An ETF is basically a basket of stocks, and buying one will give you a very small piece of a lot of different stocks. It's great for beginners because it removes a massive portion of the risk. Putting all your eggs in a single basket and choosing the wrong stock to buy and hold is an easy way to lose big. And trust me, I'm talking from experience. Now, I'm not saying individual stocks are bad. I own 30 or 40 individual stocks, but I always try to keep at least 50% of my investments in an ETF as an insurance of sorts. Not to mention, most professional investors fail to beat the S&P 500, so simply getting an ETF that tracks it can be a pretty smart decision. If you want to buy individual stocks, then you need to decide what type of stocks you want to invest in. Are you after income? Do you want to grow your capital? Do you have a specific trend or sector you want to focus on? I won't go into much detail because you can talk about this for hours, and I have other videos on the topic, but I'll give you the checklist that I used when I first started, and it's based on advice from Benjamin Graham, Warren Buffett's teacher, one of the OGs of value investing. He suggested focusing on large, established companies with stable, growing earnings, low valuation, good balance sheet, and a strong dividend record. After picking your investments comes step 4, the final and most important one, and that's patience. You won't get rich overnight, and that's fine. Chasing quick returns is a guaranteed way to blow up your investment account and lose your money. A lot of new investors do that, and that's why something insane like 90% of individual investors lose money. If you want to be in the 10%, learn to trust in the power of compounding. There's an old investing cliche, time in the market beats timing the market, and in my experience, that's absolutely true. As a rule of thumb, most financial planners use a 7% expected return from stock investing. It doesn't sound like much, but over time, it really builds up. So carefully research your stocks and ETFs, pick them well, buy them at a good price, then sit back, relax, and let your money work for you. That's it from me. I hope you found the video useful. If you enjoyed it, leave a like, leave a comment, and I'll see you again in the next one.